What's up, everybody? Welcome to the Stocks channel. My name is Cory, and in tonight's episode, I'm doing another stock market technical analysis update. And if you've been following along on my channel, you now know that we have hit all of our upper price targets on the SP 500, the Nasdaq 100, and the Dow Jones Industrial. So I think that's well deserving of you smashing that like button on this video and subscribe to my channel so you can follow along on all of my updates. Now, first up, we have the ticker symbol SPY, which is our SP 500 ETF. So let's go ahead and crack open this chart and see what's going on in the stock market today. Alright, so with today's price action, we saw very bullish price action all around in the stock market. And with the S&P 500, we saw it close up 1.45% higher. And we have now exceeded our next price target, which was right here around this $354 level. Now, this is absolute insanity that we're talking about these price levels, but these Fibonacci extension levels have been so key in following these trends, and we seem to just keep hitting these levels and looking for the next one. So because we've met our price target now of the 1.272 Fibonacci extension, we now turn our gaze up to the 1.618, which is way up there at $369. Now, we still don't see that spike in volume, and volume still looks very normal to what we've seen throughout this trend in the last couple of months in July and August. So we still haven't seen that FOMO type of melt up from increase of volume and people jumping in at the top. And I still do think that's a possibility. So remember, our bear bull survey, the historical average for bulls is typically 38%, and we're still sitting down here at 32%. Now, the historical average for bears is 30%, and we are sitting closer to 40% as of last week's survey. So we still do have this potential for these people that are still bearish on this market to FOMO in and join the bull camp at last minute and really drive that FOMO melt up that we have yet to see. So we will always update you on this survey when we get the updated results from this week's survey. But right now, I'm expecting to see the next survey show a decrease in bearish sentiment and an increase in bullish sentiment. Now, that will tell us that we're nearing the top, because as everybody becomes bullish, that's typically a sign that the market is ready to go through a reversal. Now, the smart money has been bullish this entire time, and we did see the smart money buying in at the March lows, and we saw that there was an incredible amount of volume back then. But right now, we really just see retail investors kind of funneling into stocks slowly and steadily, and that's really been leaving to this market grinding higher day by day, and we're really just taking that staircase up. So I would think with any possibility that these bears FOMO into the bull camp, we are going to see this upper price target now of $369 before we ultimately see that significant pullback. Now, notice throughout this upward trend, we've only had about one red day to interrupt the trend before the upward trend ultimately resumes. I mean, that is extremely bullish, to say the least. We've been trading above the 5 EMA, and we still see the 5 EMA breaking above the 13 EMA, and we see this bullish momentum continue. And if anything, it seems that the bullish momentum is actually picking up and increasing in strength. So with today's close on SPY, we do see that we close back above the upper Bollinger Band. So I would not be surprised to see a little bit of a retracement and a little bit of time for the price to cool off before ultimately resuming that melt up uptrend that we've been noticing. Now, we did open yet another gap, and if we look at a 1 hour chart here, we see that there's this price action where there's been a gap up in the morning and we have not yet closed that gap. And this market has loved the gaps because we see all kinds of gaps in this market. If we zoom out here on a 1 hour chart, we have all of these green gaps which are showing us where the price jumped above and never came back. And that is showing just how strong the upward momentum is in this market and how bullish this trend has been. Now, gaps typically get filled, so if we go back to a daily chart, we still do see that there's some downside risk in any event that we get a pullback into these areas and close all of these gaps. So from today's close to our bottom gap that we have shown here, that is now an 8.72% pullback. Now, that's not surprising because a market correction is usually right around that 10% mark. So I could easily see this market continuing to melt up and then ultimately taking about a month to cool off. Now, will September be the month where we see that correction? Well, that is still to be determined, but it's still likely that we see an increase in volume after the Labor Day holiday, and we could see smart money start profit taking very soon. However, right now, if we're strictly looking at the technicals and the price action and we're staying objective, we have to give benefit of the doubt to the bulls and this strong momentum trend. And that's why we have been repeatedly saying, do not try to short this market, because you never know when the market top is going to be in. Wait for the signs of that reversal, and then we will know that the top is in and we won't have to play any guessing games. It's so critical to protect your capital in a market like this. And if you go short on a market like this too soon, you could lose a lot of money and completely kick yourself out of the game before you ever have time to make another trade. So right now on the S&P 500, we still see a very bullish trend, and we are now well above our magenta trend line, which we thought might play a significant role in the top of this market. We now see that has not been the case, and we will leave this trend line on this chart in case in any event that we come down and test that trend line and see if it'll act as support. All right, next up is the Nasdaq 100, and we are looking at the QQQ ETF, or the triple Qs, and we see that the Nasdaq 100 also had a very bullish day, closing well above the 5 EMA and right at the top of the upper Bollinger Band. Now our next price target on the QQQ ETF is $311, and with today's close, that would be an upper move of about another 3%. Now we do see the Nasdaq 100 does seem to have a small increase in volume, but nothing substantial that would imply we're heading towards a blow off the top situation. Now volume is looking strong on tech, and tech has been leading the way in this rally, and we see no signs of tech slowing down, with the 5 EMA looking very aggressive and really approaching that 45-degree angle of attack now, which is showing us that momentum has been picking up and this bullish trend is actually still strengthening, which is absolutely crazy. But that is the market that we are in right now, and do not bother trying to rationalize these price actions or these bullish momentum moves. Strictly stay objective and follow these trends and trade accordingly. So right now this trend is saying do not try to short this market and do not try to call a top, and we could continue to grind higher and ultimately even melt up and go into a blow off the top situation in any event that we see that FOMO money come in off the sidelines and jump into the market at these highs. So remember, with the Nasdaq 100, we want to see a trend reversal, and we want to see that 5 EMA start to show some signs of weakness, and we want to see the price action start closing below the 5 EMA, and ultimately we want to see that 5 EMA cross down below that 13 EMA to let us know that the trend has reversed. So if we jump over to a monthly chart on the Nasdaq 100 Qs ETF, we see that we're now trading 5% above the upper Bollinger Band. Now that was much higher in August, but with a new month, we get an expansion of the Bollinger Band. And you could see these Bollinger Bands are really starting to fan out, and we're seeing the Bollinger Band expand at the top and the bottom because of how volatile this market's been and how it's been going up in a straight line. You could see by this chart that we've been going up in a straight line since April. Ever since the crash, the Nasdaq 100 has turned up to the upside and never looked back. So remember, when we see a market that goes up in a straight line, we have to protect ourselves to the downside, and you don't want to be jumping into the market right now at these highs with all of your money if you're sitting on the sidelines. I can't stress it enough. You don't want to be that dumb money jumping in at the top, just hoping the market's going to keep going higher. Well, yes, the market's looking very bullish. This market could turn around in an instant, and that's why I call it taking the stairs up and the elevator down. Now, we've yet to see the elevator down, but we will get into it later tonight. We're going to show some more warning signs that show that this market could be due for a correction any day. So remember, if you're already in the market, there's no reason to panic sell, but if you're currently in cash looking for an opportunity, wait until we see that correction for a better buying opportunity in these markets. So next up is the Dow Jones Industrial, and we're looking at the DIA ETF, and we see that Dow Jones had an absolute incredible day today, closing up 1.54% and breaking out well above the upper Bollinger Band. Now remember, this market loves gaps, so of course we also opened up another gap below us on the Dow Jones, and we did break above our price target, which was at $289 mark. So that makes us 3 for 3 on these indices. We have called price targets higher and higher on SPY, QQQ, and DIA. And with DIA meeting our price target today, we have now met all of our price targets, and we now turn our gaze to the next price targets higher. So the next level on the Dow Jones is going to be this $293 mark, and that is going to tell us that the Dow Jones is ready to join the S&P 500 and the Nasdaq 100 and potentially forming new all-time highs. So if we zoom out here, we do see that the previous all-time high on the DIA ETF was somewhere around $295. And we're now getting into that range where we could see that all-time high within striking distance. So price targets on the Dow Jones are obviously our Fibonacci extension level of 293, and then of course a test of our previous all-time high around $295. As far as technicals go, the Dow Jones is looking very bullish, and we see the 5 EMA looking very aggressive and trading well above that 13 EMA. So overall, all three indices are looking extremely bullish, and we could continue to see this market melt up and grind higher. So I can't stress it enough, do not try to short these indices until we see a trend reversal. Next Next up is the VIX, which is our fear indicator. And we see another warning sign with all three indices going up today, and we still see the VIX climbing higher. This is probably one of the most awkward things I've seen in the market in many years now. And we see the VIX went up 1.72% today, even though all three indices also went higher. So we're still seeing that fear creep into the market, which is a warning sign that something could be going on underneath the surface in the stock market. And we really need to get a little more cautious and a little more risk adverse right here at these levels of the VIX, because as soon as the VIX breaks into the 30s and 40s, we could really start seeing those 5 to 6% pullback days in the market. And if we go back into the VIX in the 50s and 60s, that's when we were starting to see the price action move like 10% per day. So I can't ignore the fact that the VIX is climbing higher. And yes, it is just a warning sign. It is not something that needs immediate attention. But if you look at the VIX, we have a very bullish trend with the 5 EMA trading way above the 13 and the price action just climbing that upper Bollinger Band, continuing to close higher above the 5 EMA. Now we do also still have a positive sloping 200 simple moving average on the VIX, and we're going to look for the VIX to come up to the 200 simple moving average right around that 28 level and see if the VIX is going to close above it. So right now the trend is still looking very bullish on the VIX, and we definitely saw a trend reversal from the downtrend, and we are now currently in an uptrend. So respect the VIX and pay attention to what it's doing, because it's flashing warning signs right in front of our eyes. Next up is the sectors driving this market, and the first one we're going to take a look at is the financials, and we do have the financials consolidating here in this wedge pattern. And with today's close of financials up 1.43%, we see it pushing right above our upper resistance trend line, and it's going to be a very interesting test to see if financials are going to break out of this consolidation wedge pattern to the bullish side and ultimately form that higher high that we've been waiting for. So if we zoom out on the financials, we still see lower highs, but we also see higher lows. Now that is by definition a wedge consolidation, and it could break up to the upside or the downside. So right now we want to see financials break out to the upside and form that higher high, so we could ultimately see if we're going to expect the SP 500 continue to grind higher for the rest of the year. The SP 500 is not going to keep going higher if financials break out and show a bearish trend. So this is a very critical moment in the financials, and we're only a few days away from knowing how this consolidation wedge pattern is going to break out. So right now, watch the financials very closely and pay attention to see if they're going to be bearish or bullish. Next up, we have the industrial sector, and we see industrials are still looking very strong, forming new highs and still forming that very strong upward trend. So looking at the price action and looking at the technicals on the industrials, there's no reason to believe that the industrials aren't going to continue going higher. And we do see the industrials are going higher on higher volume, which is another great sign that there could be some accumulation in industrials. There could be a rotation in the sectors, but all around we saw all of the sectors going higher today. And today was actually a very bullish day all around. Now jumping over to healthcare, we see the same exact story with healthcare closing up 2%. So overall, all of the sectors look very bullish. We have very bullish trends and very bullish price action all around. And all three indices are meeting or exceeding our price targets that we're giving here on this channel. So it's still very possible that we get that blow off the top melt up situation any day. As soon as all of the bears decide to become bulls, they're all going to FOMO in at the top. And that's how we're going to know that this market is ready for a correction. When there is no bearish people left in a market, you know the market is going to correct any day. But right now we have to give benefit of the doubt, and we have to go back to our survey, and we do see that there is still more bears than bulls. So that still tells us that there is a possibility this market could continue to melt up and grind higher, because we see a situation where we have more percent of bears than the historical average. The market knows that, and the smart money drives the market, and the smart money isn't going to sell while retail investors are scared. The retail investors need to get greedy before smart money decides to get fearful. So next up is the US dollar, and we're looking at DXY, and we do see the US dollar having a little bit of a nice bounce today, closing up 0.36% higher. Now it's still too early to say if this is going to be a bottom and a trend reversal, but we need to pay attention to the dollar, because any signs that the dollar is strengthening is going to tell us to expect that correction in asset prices. So right now we look at it for what it is, and it's still a lower high, but we're going to continue to look at the dollar and we're going to continue to see if we see that trend reversal. So for the sake of watching the dollar, let's go ahead and move up this resistance trend line and see if we can form that higher high and ultimately see if we're going to see strength return to the dollar. But ultimately, if the Fed continues to print more money, we're going to expect to see that dollar continue to weaken and asset prices continue to inflate. Next up is gold, and of course we saw the dollar had a good day today, which means gold probably didn't, and we did see gold closing down 1.4% today. Now one day doesn't form a trend, and we did have a bullish breakout of this consolidation wedge, and we did have the 5 EMA cross above the 13 and a close above the 20 simple moving average. So right now it still looks like this could be a nice buying opportunity on gold. And anytime we have a breakout, it's still a high probability that we get a test of support and another bounce before ultimately going on that bull run. So it's too early to say if gold's going to continue its upward trend, but it still looks very strong and it still looks like the bullish momentum is coming into gold. And I would expect to see gold at least come up here and test this $2,000 level before ultimately seeing if it's going to break that resistance level or get rejected. Now let's take a look at our FOMO stocks. And our first FOMO stock, which is a market mover, is Apple. And we see Apple did have a bad day today, closing down 2%. However, Apple is still trading in a very bullish pattern, and we still see the price trading above the 5 EMA, and the 5 EMA still strongly above the 13. So right now we're watching Apple to see if rationality will join this market, and we'll see Apple come down for a correction, and that will be an early sign to see a stock market correction because Apple is such a strong market moving stock. But right now we did have a bad day on Apple, but one bad day doesn't set a trend, so we need to continue to watch Apple to see if it's going to have any signs of a reversal. Now our other FOMO stock is of course Tesla, which is really just taking some time to cool off after its massive rally when the stock split was announced, and we do see 2 red days in a row on Tesla. So if we get one more down day on Tesla, we could be seeing that trend reversal, and we could be starting to see that correction in the market where these FOMO stocks are starting to rationalize and we're starting to see reasonable valuations come back into the stock market. But like I said, 2 days of Tesla in the red after that monster rally is nothing of concern, and we still see the 5 EMA trading well above the 13 EMA. So if you are interested in chasing Tesla, which I strongly don't recommend, you would be looking for it to come down and test the 20 simple moving average and seeing if it'll resume its uptrend before setting into a position. But after a rally that strong just over a stock split announcement, me personally, I'm not going to chase it, but I understand that people love this stock, and if you love something and you know how to trade it well, then who am I to say don't? So right now we're still looking for Apple and Tesla to show that sign of that reversal, and we have yet to see it, so there's no bad news in this stock market just yet, and we still see bullishness all around. So jumping back to the SP 500, we are still seeing this grinding higher and melt up market, and I would not expect to try to call a top on this market until we see some sign in the technical trend and the price action that we're going through that trend reversal. So right now I have my price target set at $369, and I will say that that price target is an absolute stretch, and if the market gets up there, I will seriously be considering a possibility that we have seen a short-term top in this market. However, we're not in the business of calling a market top, and who knows what's actually going to happen. But right now we're staying objective and we're following the price action in the technicals, which say that this stock market still wants to grind higher. So please remember to smash that like button on this video. It really helps me out, and I hope these videos are helping you out. And subscribe to my channel if you have not already so you can follow along on all of my technical analysis. So good luck trading, everybody. And as always, I will see you in the next episode.